Hello, it's Angie and this is UK Money Wisdom. Did you know that a huge number of pensioners in the UK are currently being overtaxed without them even realising? And the worst part? HMRC isn't going to send you a letter to tell you about it. They don't have to. The system, you see, is designed to take the money first and reconcile it later. I'm seeing thousands of people who worked for 40 years, paid their dues and live modestly. They're losing £20, £50 or even £100 a month because of a computer guess or estimate. If your tax code has changed recently, or if you have more than one source of income, you are likely caught in the so-called pensioner trap. So today I'm going to show you the 3 specific ways HMRC quietly overcharges you, and the one simple phone call or online change that can stop it happening immediately. So let's look at this guesswork system, shall we? And here's the part HMRC doesn't broadcast. They don't actually know how much you're going to earn this year. So they estimate it, often using outdated information, sometimes a year or more behind reality. And they build your tax code around that guess. They see your state pension, which is taxable, but paid gross, and they try to claw the tax back by taking the tax from your private or workplace pension instead. But life changes. Pensions start or stop, lump sums are taken. And unfortunately, in a system that is this automated, silence is treated as consent, whether it's right or wrong. If you don't challenge the tax code, the system will assume it's correct. These are the 3 traps. And please share these with your other pensioner friends and loved ones so they can do something about it as well. You see, HMRC usually attaches your tax-free allowance of £12,570 to what it thinks is your biggest income. But if you have 2 or smaller pensions, it often allocates that allowance wrongly. And the result? One pension gets taxed at 20% from the very first penny, even though your total income is still within limits. You are effectively giving the government an interest-free loan at exactly the stage of life you can least afford it. No one wants to do that. Let's look at the state pension inflation jump. That's trap number 2. The triple lock sounds generous, doesn't it? Until it quietly pushes people over a tax threshold. Many pensioners who were tax-free last year suddenly become taxpayers this year. HMRC's computers often over-adjust for this and trigger a week 1 or month 1 tax code. That's what we call an emergency setting that assumes every payment you receive is your normal income, even if it isn't, which means more tax comes out than should. Let's look at trap 3, the emergency code. This is the big one. If you recently started drawing a new pension or taken a lump sum, HMRC often slaps on an emergency tax code. I've seen people lose 30 to 40% of their very first payment, not because they owe it, but because the computer assumes that one-off payment is their new monthly salary. It feels like a scandal when it happens, but the important thing to remember is this: It is fixable. So let's look at the fix. How to take your money back. Please do not wait until the end of the tax year. That is the single biggest mistake pensioners make. Here's what actually works. Number 1, check your P2 coding notice. That's the document HMRC sends showing how they've calculated your tax. If the income figures don't match reality, the code is wrong. Number 2, use your personal tax account. If you're comfortable online, log in and update your estimated income. The moment that figure changes, the tax code recalculates. And number 3, we'll look at the joint account defence if that's relevant to you, because interest on joint savings should be split 50-50, not dumped onto one person's tax record. It's 50-50, so do check that is happening, and that can be quite a common mistake, as many of us have found out. So just to recap, if you have got any inkling that your tax code might be wrong, or at any time you feel that it's worth checking, and it often is, do the following as I suggested. Check your P2 coding notice. Use your personal tax account if you're able to, and if not, call. And number 3, the joint account defence, if that's relevant to you, about joint savings being split 50-50. I want you to do me a favour. If you have a parent or neighbour or a friend living on a modest pension, send them this video. You see, the quiet generation, that's us, is being hit hardest because they don't want to make a fuss. We don't really want to make a fuss. But this isn't making a fuss. This is making sure your retirement income isn't just a best guess made by a computer in Newcastle. I'm Angie, and this is UK Money Wisdom. I'll be back soon with more ways that you can save money and avoid mistakes with another UK Money Wisdom video. Bye for now, and have a wonderful day.